and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Hope you guys had good week trading this week. A little bit of shenanigan move last couple days. We'll talk about that. Let's start with, let's continue with our analysis. Start with Spider, Diamond, Qs, Russell, Semis, and the banks, and we'll call it a day. Let's start with some of the levels here. I've annotated these levels previous to this video. You can see here 279, 278. What we did today, we saw this level getting filled. There was a little gap there, right? We saw a little gap that we got filled, that level right here, right? And that's the level coincident with the 20 MA. We have a small gap, small down gap right there, 278, 279. That's the level we're sitting at. With this down move, we did open down gap. Bears have opened this down gap. So this down gap is going to make things hectic for the bulls in the short term. The faster we fill this gap, the better it is going to be for the bulls. As I look at this price action, it reminds me a lot of what happened back in 2000 or January 3rd and 4th. You can see here, let me put this right there. Looks a lot like what happened. What that means is that we didn't see a shenanigan move like this for about 3 years. This was a January 2nd and 3rd. Today's March 22nd. It literally took 3 years to see this kind of shenanigan move. You can see that market has been very docile manner since then. Market, I mean, we did see some up and down movement a little bit here and there, but nothing like dramatic like this in a one-day reversal back to back, right? The market was up about what, 1.65, 1.7% yesterday. We're down about 2% today, like back to back like that, right? We had a huge move yesterday and we got huge down day today. We haven't seen a move like this since early January. I think because that 280 level, right? This is a level that, you know, that everybody's been looking at, right? This is the most anticipated resistance of the year. Not only that, I mean, you know, CNBC has been pumping this 280 level, right? And I think, you know, nowadays everybody got charting software or charting you know, tools where they can see these levels, and this is that prominent level. I think what really happened was a lot of people were very nervous about it below this level. Not only that, CNBC pumping it like 280 is important level, man, and you know, this chart master coming out saying that this thing going to 260, and they're saying that the best bet is this thing coming all the way down to 230s. And so, like, so many people are so nervous and anxious below the 280. So I think what a lot of people are doing, and a lot of people are strategizing, is that in their own little ways that, you know what, I'm going to wait till it clears above 280. So they're looking at that. And then what happened was last couple of days, this was a Wednesday and Thursday, you can see that we're pulling back a little bit, kind of a retesting that level. And then they're saying, you know what, I want to see it hold. I want to make sure we see a reversal. I want to see we see a confirmation of a bounce. And what happened was, this is yesterday, and you can see that we saw a bounce, a strong bounce there. So pretty much all day long yesterday, it was bullish. I mean, everything was bullish. Everything was green yesterday. So I think a lot of people jumped in yesterday. A lot of cash people maybe who were, you know, who closed out their positions here with loss, and they missed out this entire 20-25% run because they're scared to go long below the 280. Now that we see that we're holding above 280 and we see that we're bouncing above 280, I think a lot of them jumped in yesterday. Not only that, a lot of bears, maybe a lot of bears been shorting all throughout this run. And they finally got tired of it. They heard the CNBC chart master saying that 280 is important level. So he was looking at it. And then once we see a pop yesterday, start going back long. And then what happened today? Boom, right? So And this is kind of what we've been talking about. If you've been, watching my videos, I've been talking about how, after 20% run, 25% run on the indices, well, once you see a lot of people, a public start getting into it, things are going to hectic, right? This is why I've been saying that I don't like crowded places. This move here, since early January till today, till yesterday really, the move has been pretty pleasant. Like the market has been pretty docile manner. It respects a lot of these technical levels. We didn't see a lot of this up and down shenanigans like we saw today and yesterday. And again, this is first time we're seeing this, first time this volatility is showing back up since last early January. Literally January 2nd and 3rd. Is because everybody is getting interested going back long above 280. And once you start chasing the market, well, the market loves to punish those chasers. And so, after most of move has already been made, and this is kind of what happens a lot of times is that a lot of people miss out on a move, majority of move, and then they start chasing it later, and things gonna get much more difficult. I forecast that we're gonna see some shenanigans, we're gonna see some volatility, we're going to see some turbulence in the next, 2-3 weeks, unless maybe 2 to 4 weeks, maybe a little more, unless we see some kind of reversal here and bring this back up and fill this gap quickly. This move here, and we talked about this, right, back in early January. And this was the point where I forecasted, I predicted we're going to see a complete V-shaped reversal. Because you see this gap down, right? That gap down right there, the bulls filled that gap and we blew right through and closed above that gap. That is very rare to see. I don't believe we're gonna see something like that. What's probably we're gonna see is this thing maybe, if we do see a bounce next week, we get back up here, maybe fill it or in that vicinity, we may fall back. The best case scenario for the bulls to reverse it back up and continue this bullish run next several weeks is to maybe get up and gap it right back up and then make this into another island. Bulls have made a lot of island reversal. This is an island reversal here. This is an island reversal here. And this is an island reversal here. So bulls have built a lot of island reversals. And if they want to continue with that trend, we want to see this thing going back up and getting right back up. Because even if we go and fill it, when a lot of times when the gap gets filled, it's going to act as resistance and we may fall back down. So we do have a little tiny gap here at 279, 278. It's such a small gap. I don't know how much impact it's going to have. If we do see a gap down though on Monday or Tuesday or next week and turn this to an island top, for sure, we're probably going to come back down and retest 275 and 274. Keep in mind though, 275, 274, 33-ish level is pretty strong support. First of all, this is the island reversal, reverse island bottom reversal, right? We do have a 200 SMA in that vicinity, that's my 200 SMA here. We do have a 50 EMA residing in that vicinity as well. And that's the level coinciding with that island reversal that was open back in March 11. So 275, 274, pretty strong support. This was a level we saw 50 EMA scooping it up. We talked about this last several weeks. This thing came down. Where do we find support? This level right here, coinciding with the 50, right? That 50 is actually has a pretty impressive resume. Why? We saw that 50 scooping up, supporting the bulls here. We saw that 50 also not only respecting, it was protecting this gap area when the bear is trying to bring it down. Now the 50 is going back up here. This is a 50 EMA. This is 200 SMA. SMA is a simple moving average. EMA is exponential moving average. If you want to put these moving averages in your chart. And so you can see that this gap area is now protected by 200 SMA and the 50 EMA while that this island reversal. So if we do see this market continue to slide next week and come down to 275, 274, I do think that that's going to be pretty solid support, at least in the short term. I can't promise that this is gonna come down and make new all-time highs, but I do think that we're gonna at least see a bounce in the short term, and that short-term bounce could lead to something bigger. But we need to see how it bounces and how it behaves after it reverses, right? We may get up and then maybe fall back down. I'm not sure, right? So at this point, I think we're at the juncture where we saw the return of volatility, and I'm kind of expecting that volatility to stay for a little bit. I don't believe this thing come all the way down 260. I think for now, let's kind of follow up next week and see how it plays out. But I think for now, I think the worst case scenario would be maybe 270. I think that would be 270, 268 will be the worst case scenario. This, with the recent volatility, this could possibly bring it down. That will be the worst case scenario. I talked about this last week. You guys remember last week, right? But we do have these gaps, right? We got the small gap here for now. And we got the 250 MA there, so I think 275, 274 could hold in the short term. So let's follow up again next week and see how these levels hold or how the market has been behaving, and we'll go from there. Let's go to the diamond, right? Diamond is similar to the spider, but diamond's already close near the 50 MA there, right? Spiders actually still have some time, or still have some room here before this is spider. You can see 50 MA is down here, but diamond is already near the 50 MA level there. And diamond with this lower high here looks a lot like potentially a bull flag, right? Potentially a bull flag. We don't know that yet until this thing actually break out of it and then make another leg higher. But potentially a bull flag, we don't know that yet. We do have gap area at 252 and 250, as you can see right here, right? 252, 250, that's the level. You can see 50 MA is in that vicinity. 50 MA did act as support back. You know what, I'm gonna get rid of this. It's a little bit messy now. So we got the 50 MA there, and that's where we saw that bounce pulling back. Maybe a retest of that 50. 50 did act as support in that vicinity back in late January. Again, that 50, you know what I'm gonna do? I'm gonna actually move this like this. Like that. That's the gap area, right? And you know, yeah, that's the gap area. So we got the 50 here, we got the gap area here, we got the 200 SMA in that vicinity. So we got support here, we got a lot of supports. So I think next week we may continue lower, but I think some of these levels are going to act as support. We're probably going to see some short-term buyers buying those dips here. Let's look at a Qs. Qs far from 20 and 150, right? Some of these indices are getting close to 50, 100, but Qs, man, they're much, much further away from the 200 and the 50 there. Hasn't even retested the 20 either, right? We got these gaps here, 177, 175. This potentially coming down, retested level. You can see how Qs did so well. You know what I'm gonna do? I'm gonna move these up right here. Like this. You can see how all these lower highs, you know what, I'm gonna get rid of this too. All these lower highs has been reclaimed. I mean, as far as the downtrend is concerned, bears got absolutely nothing on the NASDAQ, because all these lower highs been, not only has been reclaimed, we cultivated higher high. What is the definition of a downtrend? Lower highs and lower highs and lower lows. What is the definition of a uptrend? Higher highs and higher lows. So we can expect that this pivotal higher high is very, very important. Even if he still comes back in, we can say that, hey, we're coming back down to cultivate and establish higher low, right? And it may not be a perfect higher low, and we don't know that yet if we're going to come all the way back down or not. But this higher high is tremendous victory for the bulls on the NASDAQ. And this is something that bears do not understand, right? this is a tremendous victory from the bulls. This is tremendous work because we have now completely broken out of this basing period, which it took what, nearly 5-6 months here, and that all these lower highs been reclaimed, and that we have cultivated a higher high there. We got that pullback today, and you know, this is we had a huge move, right? And so it's nothing huge deal when it comes looking. If you really look at things like a big picture, today's move, this 2% down move, is nothing to be scared about or nothing to be in panic about. You know what I mean? And always these short-term traders always one day sad, one day happy, every single day up and down, and you know, they live their life with you know, bipolar syndrome. Anyway, 177, 175 is going to be the level to watch next week. I think that's 20 EMA is in that vicinity. I mean, we got these levels here. I think Nasdaq is looking so much more stronger than all other indices. It's already up 18% year to date, despite the fact that we got 2% down. I mean, it was up 20% at one point, I think, right, close to 19%, leading the entire market there. So I mean, the Nasdaq looking much more bullish. I'm just looking at my other screens and see if there's anything else I want to report, but nothing much here. But let's continue here. Let's go to Russell 2000. Russell 2000 did make new low here. You can see how Russell is so much more weaker today comparing to all other indices, Spider, Diamond, and the Qs, because you know what? Russell 2000 is still below 200 SMA, and that we're getting near retesting the 100 SMA, right? And so, and we also made a lower low, like that in the short term. But again, that potentially looked like potentially a bull flag. We don't know that yet. Again, we need to see this thing breaking up before we can say that that's a bull flag. We don't know if it's going to be a bull flag or something else. But I think 145 is an important level. There was a prior support, potentially new support. Or we may see this level holding there. I should actually put that right there because I think we got that 100 SMA in that vicinity. Kind of a short-term resistance support there. So we got 148, 145 is the level to watch. You know, I want to actually throw a fib here in this one. I want to do that too. So we got those levels. We got 148, 145, 142. Because I mean, at Russell being a little bit weaker here, we may see a little bit more volatility on the Russell. But I think once the Russell, you know, once the market resumes, I think that some of these lagging indices is what's going to make other indices to go, right? And they ask, what is going to be the catalyst for the market to go higher after 20% run on the S&P? Well, the Russell and the banks and some of the other sectors there are certain sectors that hasn't been moving, and those sectors are going to start to move, and that is going to be the catalyst for these indices, to which I believe that's what's going to happen again. But I'm still in the camp that we're gonna face some volatility next couple weeks here. Let's go to semiconductor. Semiconductor is far from 200 SMA and the 50 EMA, right? SMA simple moving average, EMA exponential moving average. You can see we cleared that. We're getting back, and this is the prior resistance new support level here, 105.75. This is retest of that, and you can see we kind of actually, and I'm going to put this here because now you can see it has reclaimed this lower high. Now we're at an equal high advantage for bulls. We no longer have lower highs anymore. This was lower high, lower high, lower high, lower high. This is now starting to getting into equal high territory. That means we're no longer in a bearish territory in the intermediate term. We're getting into more of a bullish or neutral zone in the intermediate term. But in the minor term, obviously bullish. Primary term, we gotta go far out, but we are bullish in the primary. But in the intermediate term, we're getting into neutral to bullish zone here, territory here. And some of these moving averages to watch should the price continue lower. Banks have seen a little bit more decline today compared to other indices, though Russell's seen the worst today with 3.64% down today. But banks actually down about 7% in 4 days. About 7% there. And we're retesting now the prior support level, right? And that's the level coinciding with this gap area. So you can see 200 SMA, we're below the 200 SMA, we're now below the 100 SMA. As far as the chart is concerned, XLF looks the most vulnerable because we're, you know, a lot of these large indices like Spider, Diamond, Qs, they're all above that. But the small caps, and also even semis doing well, but the small caps and the banks are lagging. We're below the 200 SMA. We're still not making much progress here. So, but I think this is going to be an important level here, 25, but I feel like there's a chance we may come and fill this gap. Maybe there's some shenanigan up here before getting back up. But I still think banks is going to do well. I think banks going to lead the indices higher. But overall, I think, again, like I said, from earlier of this presentation, that I think we are going to face some turbulence in the next couple weeks. Maybe 3 to 4 weeks possibly, unless we see the bulls going back up and fill this gap quickly and start to, you know what I mean, continue higher. But even if we continue higher, there could be a volatility as it starts to march higher. I don't think we're gonna see a smooth, docile move here. Market, remember what I've been talking about, market has already made its 20% move. And market knows that there's going to be a lot of people want to chase this up here. They don't want to miss out on another bullish run. And so desperate people start coming chasing this here, and you're going to have to pay the price for chasing it up here by going through some up and down shenanigan and not able to ride this smooth bullish run. People were brave down here, understood their long-term analysis. You know, when everybody was bearish, when everybody was scared, when everybody was fearful, when everybody thought the crash was going to come, there were people, including myself, who was brave and bullish, stuck with their long-term analysis and forecast, started buying it down, held their position, adding more. It was very, very pleasant bullish run. But once you start, you know, once that all that pleasant move has already been made, 20-25% on the indices, and then you start chasing after that move just happened in just 1 quarter, in 3 months, and you want to chase that higher, you know what's going to happen. The market is not going to be so pleasant. I mean, and I think that's kind of what I forecast here in the next couple of weeks. I don't think market is, I think we're going to see some volatility here. And this is completely normal after 20-30%, 20-25% run since the December lows. I mean, Qs have made what? Yeah, close to 30% since the December lows. I mean, you cannot expect the market to have another smooth move. I mean, anything is possible, but the probability, the odds were catching up against the bulls. And that was a reason why I've been closing out some calls up here. And you know I closed out all of my calls on the Qs yesterday. But I'm still holding quite a long positions that I've been holding really since early 2016, and a lot of my triple shares that I bought down on these lows here. But I think let's look at some of these levels. I think we're gonna see some turbulence, and we'll deal with some of these levels. We'll follow up next week and see how the market dealt with these levels.